Internal Revenue Service IRS tax news. Able accounts, a valuable financial solution for people with disabilities. Tax tip 2021-148, October 6, 2021. Achieving a better life experience or able accounts, there's a link to that here, are tax advantage savings accounts for individuals with disabilities and their families. These accounts help disabled people pay qualified disability-related expenses without affecting their eligibility for government assistance programs. Here are some key things people should know about these accounts. Annual contribution limits. The 2021 limit is $15,000. Certain employed able ABLE account beneficiaries may make an additional contribution up to the lesser of these amounts. The designated beneficiary's compensation for the tax year. The poverty line for a one-person household for 2021, this amount is $12,880 in the continental U.S. and $16,090 in Alaska and $14,820 in Hawaii. Savers credit. Able account designated beneficiaries may be able or eligible to claim the savers credit. There's a link to that here for a % of their contributions. The beneficiary claims the credit on Form 8880, credit for qualified retirement savings contributions. There's a link to that here. The savers credit is a non-refundable credit available to individuals who meet these three requirements: are at least 18 years old at the close of the taxable year, are not a dependent or a full-time student, meet the income requirements, rollover and transfers from a Section 529 plans. Families may roll over funds from a 529 plan to another family member's ABLE account. The ABLE account must be for the same beneficiary as the 529 account or for a member of the same family as the 529 account holder. Rollovers from a Section 529 plan count toward the annual contribution limit. For example, a $15,000 annual contribution limit would be met by parents contributing $10,000 to their child's ABLE account and rolling over $5,000 from a 529 plan to the same ABLE account. Qualified disability expenses. States can offer ABLE accounts to help people who become disabled before age 26 or their families pay for disability-related expenses. These expenses include housing, education, transportation, health, prevention, and wellness, employment, training and support, assistive technology, and personal support services. Though contributions aren't deductible for federal income tax purposes, distributions, including earnings, are tax-free to the beneficiary if they are used to pay qualified disability expenses. More information can be found at the links below. We got the ABLE account, tax benefit for people with disabilities, publication 907, tax highlights for persons with disabilities, Form 1099-QA, distributions from ABLE accounts, Form 5498-QA, ABLE account contribution information, instructions for Form 1099-QA and 5498-QA. There's links to those items here. There'll be a link to this in the description.